Because when I started in stablecoin, I think there was $2 billion worth of USDC. Now it's 30 billion. But what really tipped me, that I remember the moment that I said, okay, I've got to get serious about this because it's here to stay. It's not going away. And even our own domestic regulators were starting to offer, palm branches towards the industry, realizing how fast it was growing. But for me, the specific use case was last year, we sold off a significant portion of our commercial real estate in our operating company. And it was significant because it was over a 30% weighting of what we were managing. And we generated a lot of cash. I called the cash desk up. I said, what can we get on this cash while we redeploy it? 20 basis points, 0.2%. Now, inflation right now is over 5%. So that means I'm basically being taxed, at around 4.8% on holding cash. And that was not a sustainable model. That's when we first started investing in stablecoin and staking stablecoin and getting a lending desk going, and all of that happened at the same time. I hired multiple people for this. It is a nascent industry. It took me 6 months to get my own internal compliance officer on board, and even longer to get my auditors, the external auditors, to sign my statements. But that's all past us now, because when I started in stablecoin, I think there was $2 billion worth of USDC. Now it's 30 billion. The idea of staking your assets and getting some kind of yield on it has become prevalent now in most of the wallets that we manage and maintain, whether it's centralized or decentralized. So we have a lending desk. We stake our holdings, and we try and earn what we can on cash. And so what I'm hoping for this year, I would like to see this issue resolved. As you know, there's been some controversy with the regulator around stablecoins. There's some litigation out there around a particular stablecoin. That's not helpful. None of us want to litigate the regulator. That doesn't make any sense whatsoever. It would be better that we get a ruling on what the terms are on stablecoins, so that we could, right now I have to treat it like a stock, like an equity. I can't own more than 5% of it in any portfolio. When in fact, I don't think stablecoins are stocks. I think they're a cash proxy. But I can't use it that way because the regulator has not spoken yet. So I'm very constructive that there's so much demand for stablecoin as a payment system, and also a way to at least match inflation, that the regulator would make some decisions about it in 2022. That's what I'm hopeful of. So let's talk about one specific problem regarding Bitcoin and how it's getting solved. Okay, so as you recall, last year, particularly at the Bitcoin 2021 conference, this issue around ESG emerged when many people were talking about it. Elon Musk made reference to it. The fact that so much power was being used, and in cases of some jurisdictions, coal was being burned to actually get a coin awarded. Now, that is a big problem for a pension or a sovereign that has an ESG committee sitting above the investment allocation committee. So they look at every asset class, regardless of what it is, to say, is it ESG compliant? And in many cases, in fact, most of them, they have deemed Bitcoin to be non-compliant because you can't know where the coin was mined and how it was mined and all the rest of that. So this is a new world of mining coming. It's getting solved. I'm certainly investing in it. And as far as I'm concerned, I'm going to be able to say, look, for all the institutions that I deal with, all my coin is ESG compliant. It's all carbon neutral. So I don't have to deal with that issue anymore as I was dealing with last year. What's missing in this industry is the infrastructure to be compliant. So if I'm an institution, I want to put $1 billion into crypto, what do I do? How do I mark to market it? How do I show my compliance department every trade by the second, the same way I do with stocks and bonds? I need big platforms. There's where FTX comes in. I became a shareholder in FTX as well. That is an institutional grade compliant platform. You can get the reporting on there. It's centralized. You can manage a portfolio. You can do a global search for whatever you want to do, but your compliance department can also see what you're doing, which is what you need. And so we need more of that. And that's very important. As they're growing that business, FTX stands probably in the centralized wallet space to be the best for institutions. And by the way, I am a paid spokesperson, so let me disclose that. But there's a reason. I'm using it. I use it. Yeah, I love the tokenization of an equity. I'm very grateful for Sam for tokenizing WonderFi. So I love that company, and he's also a shareholder in it, and it's a fantastic platform that we are able to offer 24/7 trading for a tokenized form of equity, which is going to be more and more, adopted over time. But the real issue here is to get, and I keep saying this over and over again because the crypto community is a fantastic community. There's so many great ideas, but we're not there yet until we can get the sovereign and pension plans to be able to allocate their 3 to 5% weighting, because that's where the real money is, and we're just not there yet. We've got a lot of work to do. And what I love about the FTX guys is I've had sessions with some of the designers and developers there saying, look guys, add this report. We're going to need this for compliance. Add this report, because it was born out of the necessity and need to trade globally. But now as institutions and compliant people are starting to use the platform, they're adding those features that are going to make it better and better and better to be something an institution can work with. We need more transparency, we need more security, and above all, we need more simplicity. I mean, it shouldn't be that hard, because you've got hundreds of thousands of people, if not millions, that are sitting on maybe $14,000, $15,000, $20,000 in their saving account making nothing, that would love to make 6% a year if they could figure out how to stake a stable coin, and they have no idea how to do it or get the tax reporting they need in all the jurisdictions they have to report in. It's a nightmare, but such an opportunity. The minute an ETF comes with the underlying being a mark-to-market Bitcoin itself, that will be a multi-billion-dollar ETF in 24 hours. That's my opinion, because it will let you, in any equity portfolio, simply buy the ETF for the 3 to 5% weighting you want. Then you've got your exposure directly to the price of Bitcoin. I don't like that product with futures because there's a lot of tracking error with futures. It's got to be the real thing. Now, there may be an issue around institutions that say, I don't know where the coin was mined, so I need it to be coins that I know are mined ESG compliant. You've seen a lot of that coming out of BlackRock, the Larry Fink letter every year. I mean, it'd be really great to get some clarity, because that's the largest asset manager on earth, and they have their own ESG committee, and they're dictating a lot of policy on hydrocarbons and all kinds of other issues. And generally speaking, it's being well received by the institutional client. Bitcoin is not high on their list as a clean asset yet. So the industry has some work to do in terms of getting, and I keep saying this, it's all great, if you want to buy some Bitcoin, but if you really want to see it achieve, $100,000 and above, it has to be compliant on an ESG basis to institutions. Well, I've had plenty of mistakes and plenty of errors. The important thing is I don't make them twice. And so as an investor, you're not going to get it right every time. I learned from every one of my mistakes. I cry like a baby when I lose money because it's hard to make it. But one of the biggest lessons I learned is I like to put my mistakes as lessons. At a time when multi-user games were taking off, I went to one of the large telcos, and I had a pretty good track record in the software business, and said, look, I think there's a way to turn this into a multi-offering cable channel, so that instead of you having to buy subscriptions for one game at a time, let's give you 50. Let's aggregate it and split the proceeds across the different providers with one single streaming service. I was a little nascent, a little early. But the telco liked it. I won't mention which one it was. And we spent 2 years and a lot of my money getting this platform up and running. The difference between a startup, an entrepreneurial startup that's able to pivot very, very quickly, and a giant telco is day and night. You can't get anything done overnight in a giant telco. It takes months. Yet we needed their infrastructure to make this thing work. That was a massive failure for me, and it taught me a lesson. I'm never partnering with a behemoth again. I'm not going to do that. I'm always going to work with my team, find great developers, build up a business, and then sell it to a strategic if they want it. But I'm not going to partner with them anymore.